Hello everyone, and welcome to this special presentation we have for you today. Welcome once again. My name is Stephen Primo. I am the president and founder of Specialist Trading, and our guest speaker today is a legendary trader, broker, and analyst with over 40 years of experience in the markets, Mr. Mark Chaikin. And today he's going to demonstrate how to use Chaikin analytics to find new trading ideas and monitor existing stock and ETF positions. Now, active traders and Wall Street pros are using this unique combination of fundamental stock ranking system and proprietary technical indicators to increase their profits. Now, here's what you're going to be learning today. You're going to learn how to use Mark's newest indicator, the Chaikin Power Gauge. And you're also going to see how to use this Power Gauge rating to get a quick, confident read on any stock. You're also going to see how to use 6 pairs of Chaikin buy-sell signals to better time your entry and exit points. You'll learn how to build a strong start portfolio by identifying these stocks with the Chaikin Analytics. And finally, how to use Chaikin Analytics to turn landmines into gold mines, especially during earnings season. Now, I think the best thing about what we're going to be sharing with you today, what Mark's going to be teaching you, is that all of these techniques really complement what we have for our members at Specialist Trading. In fact, we're going to show you a number of examples how well Chaikin Analytics worked with some of our signals at Specialist Trading, most notably strategy number 4. So without further ado, let me bring on our guest speaker, Mr. Mark Chaikin.
Thank you, Steve, and thank you, Brett, for making this a seamless setup, and welcome everybody. Today's webinar, I will show you how to combine fundamentals with technical analysis to increase your trading profits. A short disclaimer. Chaikin Analytics is not registered as a broker-dealer with any state or federal agency. Everything that we're talking about is for educational purposes only and not meant to be a recommendation to buy or sell stocks. With that, let's get right into it. What does Chaikin Analytics add to Specialist Trading? Well, Chaikin Analytics helps you zero in on winning stocks on both the long and the short side and makes you the smart money. And please remember that phrase because we're going to end the webinar on that note. Many of you know me from my technical analysis work, which resulted in indicators that are on almost every web-based platform that does technical analysis, like StockCharts.com, the Chaikin Oscillator, Chaikin Money Flow, and Chaikin Accumulation Distribution, which is part of Investors Business Daily suite of analytics. When all I did was technical analysis and mainly my supply and demand and money flow work, in webinars like this, and in fact there were no webinars like this because there wasn't an internet back then in the late 80s, so these were live presentations. I used to say that if you watch the Chaikin money flow, you could follow the smart money in the market. Now that we've got a broader suite of tools which incorporates fundamentals and sentiment data, I'm going to show you how you can become the smart money. And Chaikin Analytics helps you do that in 3 ways. It helps you know the fundamentals without being a research analyst. It helps you know the technicals without being a market technician. And it helps you profit from a proven quantitative model without doing the math. And then finally, it helps pinpoint profitable entry and exit signals. Now, with Steve Primo's work, you've got what I call Primo exits and entries, because I've been on a number of his webinars and on the website and read the book, and I know how compatible, as Steve said, the Chaikin Analytics suite of tools is. So our buy and sell signals, I think, are going to be very complementary with what Steve teaches, and I think you'll find this very clear in the examples. Now, just to give you a sneak peek at what we're going to help you find here, today's webinar is all about helping you find stocks on the long side like Rider Systems, which broke out in early October of 2013 from a base at about $64 a share and went up to $89 just the other day. And I'm not going to get into the indicators just yet, but just as an advanced look, Steve referred to the Chaikin Power Gauge rating. It's at the bottom as a red, green, yellow ribbon. In this case, the Power Gauge rating turned bullish on Rider in early October, and except for a brief period in December, it stayed bullish. So today's webinar is all about empowering you with our tools to find stocks like Rider on the long side, and then we'll see a number of examples on the short side, and make you the smart money. Now, the biggest problem we all face in our daily lives is information overload, and it's particularly true in the stock market in terms of how you find winning stocks, how you prioritize your time, and how you focus. So at the center of this slide is the phrase, how to focus in the age of distraction. And if you look at your email accounts, Facebook, Twitter, LinkedIn, and all the financial websites like Yahoo Finance, Google Finance, and the headlines that are meant to distract and sell newspapers and get you to watch CNBC, you know what a big problem information overload is. You can't be a successful trader or investor if you're distracted and if you're floundering around trying to find information. So our solution is Chaikin Analytics, which is available on both iPad and desktop, which brings all this information into focus for you. And we've synthesized the Chaikin methodology in this triangle. At the top of the pyramid is the Chaikin power gauge rating, which gets distilled down into a gauge that varies from very bearish to very bullish, much like the gas gauge on your car. Right under that are industry group strength and ETF strength and weakness. And I feel very strongly that industry group strength combined with the power gauge rating gives you the edge you need to trade and invest successfully. And it's not just me who feels that industry group strength is important as part of the investment decision-making process. Zacks Investment Research, William O'Neill at Investors Business Daily, Standard & Poor's have all published white papers over the years showing how industry group strength can help put the wind at your back. And focusing your long side investments on stocks and strong industry groups is something that we help you do. We now have an ETF capability, and that's another way to look at industry groups and sectors. And I'm going to show you in the course of the webinar how you can take a unique look at an ETF using the Chaikin toolkit and find strong stocks in strong ETFs and weak stocks in weak ETFs, which is another way to improve your batting average. At the bottom of the pyramid are a hand-selected set of Chaikin proprietary technical indicators that are very compatible with this power gauge rating, which is a quantitative model. Think Value Line or Investors Business Daily. Think about a model that synthesizes factors down, and we've done that, but we've done it with steroids, basically. And in the middle of the pyramid are Chaikin buy and sell signals, because knowing what stock to buy is only a profitable piece of information if you know when to buy it, and the same is true about selling. So our whole reason for being is to help you focus, and that's what this webinar is all about. Because if you can focus on the right information and the right stocks, then Steve's signals or the Chaikin signals or your own gut feel, which we don't recommend but sometimes is a very helpful indicator, will get you into trades at the right time. And focus leads to conviction. And if you've read any of Jack Schwager's books, and how many of you out there have read any of the Market Wizard books, where Jack interviews the top traders of the day, if you read any of Jack's books, you know that there's a common theme that runs through the interviews and the profiles of these successful traders. All of these people have a methodology that they follow religiously. They don't trade from the seat of their pants. And they have conviction because of that. And focus leads to conviction. And if you talk to any successful trader, they know what they're doing and why they're doing it. And that leads to conviction, which means that you don't get shaken out of a position on a pullback. And we'll see an example of that just on the next slide. And you will weather the little storms that crop up, like the 18-point down day in the S&P last week pre-opening, when the headlines out of Portugal and Italy were so bearish. You must know what your methodology is, and you must believe in it and know why it works. And that's what Chaikin Analytics is all about. So for us, it all starts with the Chaikin Power Gauge rating, which is a reliable, proven indication of a stock's potential to outperform the market or underperform over the next 3 to 6 months. It's a very simple display, but it's incredibly powerful. I like to say that the Chaikin power gauge is like a Chevrolet with a Ferrari engine under the hood. And the reason is that the Chaikin power gauge rating distills 20 factors, which are grouped into 4 components, down to a rating that has a highly predictive value. It worked in our back testing, and it's worked in real time for 3.5 years, helping find the winners and helping you drop the losers, or if you trade the downside with puts or by going short, finding great candidates for the short side. So on the left is the complete Chaikin power gauge rating. In this case, it's on Comcast on February 23rd of last year when the stock was $39.90 on its way to 56. And the Chaikin power gauge rating was very bullish. And each of these 4 components has 5 factors in them. So financial metrics are what a Warren Buffett would look at. It's 35% of the model. These are the value factors. And the 2 most important are free cash flow and price to sales ratio. And I'm going to zero in on price to sales ratio in a minute because it's really important when you look at the stocks that have taken it on the chin in the last 3 months. Stocks like LinkedIn and Lululemon and Splunk and Workday and all these stocks that get overblown valuations. Earnings are like a company scorecard. This is what a William O'Neill might look at, or Jim Cramer. The technicals, which is what I'm known for, are only 15% of the model, but they add just enough that I want to have them in there. And then finally, our secret sauce, I believe, are what we call experts or expert opinion or sentiment. And here we're looking at what the smartest people on Wall Street are doing. And part of the reason that the Chaikin power gauge rating works is that these 20 factors are what Wall Street analysts and portfolio managers at places like Fidelity, Invesco, and T. Rowe Price are using to evaluate stocks every day. They don't all look at each of these types of factors, but if you're a successful investor, you're looking at some subset of these. And you could find all this information on Yahoo Finance or Google Finance, but it would take you about 2 hours per stock to research this. And the reason we know that is that we've gotten feedback from happy subscribers to Chaikin Analytics to that very point. It used to take me 2 hours to research a stock, and now I can get an opinion on 5,000 stocks in a second. And they've come to trust that opinion. So let's just look at 2 factors in the expert category and explain why they're important. And these don't show up in other models. This is what's unique to Chaikin. Short interest is very important because the short sellers are the smartest people on Wall Street. I think Steve could probably tell you that from his experience at DLJ. But selling short is not easy. And what short sellers are paid for is to find stocks where there might be fraud or accounting fraud, where the company is overvalued, where they're highly leveraged and vulnerable. And I think the short sellers are the smartest people in the room. So when there's a large and growing short position on a stock, that has a negative impact on the Chaikin power gauge rating. Now, insider activity is interesting. We particularly look at whether insiders are buying their own stock or not. Insiders will sell stock for a whole series of reasons. They'll tell you that they're diversifying, they're sending their kids to college, and they're buying a vacation home. But the fact is, insiders buy stock for only one reason. And if you know that reason, please type Y in your chat box. And the reason insiders buy their own stock is because they think it's going up. As we all know, insiders are well compensated. They have great contracts with golden parachutes and retirement plans. They get stock options. If their stock does well, sometimes even if it doesn't, insiders are well compensated. If they take out their wallet, write a check, and buy stock in the open market, they're signaling with a clear voice that they think their company's stock is going up, not just in the long term, but now. And that's a bullish factor in the Chaikin power gauge rating. Going back to price to sales, because it's going to be a theme when we look at some of the fallen angels and why they fell. price to sales ratio has taken over from price earnings ratio as the go-to quantitative metric to determine whether a stock is overvalued or not. And what price to sales ratio measures is the dollars that you're spending in the stock price for $1 of revenue. And stocks like LinkedIn and Lululemon and Splunk and Workday, even Facebook and Twitter, all have very high price to sales ratios. Tesla is another example of that. Why is that important? Well, a lot of you who follow the market know that there are a whole category of traders known as momentum traders or momentum investors, and they'll pile into these stocks, and as long as they're going up, everything is fine. But as soon as something goes wrong, if you're in a stock on the long side with a high price to sales ratio, you're on a high wire without a safety net. And when we look at Lululemon, we'll see a case of a stock where everything went wrong and the stock cannot get out of its own way. And you want to avoid those stocks, and the Chaikin Power Gauge rating places a great importance on price to sales ratio. So the model's been back tested, and it's been forward tested in real time for 3.5 years. All those results are on our website, ChaikinAnalytics.com and ChaikinPowerTools.com. But the biggest validation for me is a recent partnership we entered into with NASDAQ. NASDAQ back-tested the Chaikin Power Gauge ratings, and they were so happy with what they saw that we entered into a partnership. And on April 1st, we released 3 co-branded NASDAQ Chaikin Power Indexes, the large cap, small cap, and dividend achievers, and the end goal is to have ETFs based on those indexes sometime in 2015. So to me, that's the validation that I'm most proud of, because an independent organization looked at the Power Gauge rating and said, we're in. We really want to move forward with Chaikin. So the purpose of this webinar is to help you find winning stocks on the long and the short side. And to do that, we've created a pattern and a set of examples that we call the classic bull. And to us, the classic bull is a stock like Comcast. We're looking at a one-year chart of Comcast back in 2012, and the charts are going to get bigger in a second, where the stock went from about 28 all the way up to 42, and the Power Gauge rating was bullish almost exclusively through that time, and ultimately went to 56. So first order of business, we want the Power Gauge rating to be bullish if we're going to be long that stock or trading that stock from the long side. I like a price trend that's up. I'm not a bottom fisher, so I'm looking for a stock that's in a well-defined uptrend, and that's not that hard to do. We're basically looking for stocks that are going from the bottom left to the upper right, and we want to find them early in the game. There's another pattern called a series of higher highs and higher lows. It's a very simple visual way to define a stock that's in an uptrend. Key point right here in the middle, we want the stock to be outperforming the market. So we've converted relative strength from a number into a heat map. When it's green, as it is on this graph, right above the Power Gauge, the stock is outperforming the market over a 6-month time period. Now, why is that important? The reason relative strength is important is that money managers are measured on whether or not they outperform or underperform the market. Hedge funds are measured that way. And so if a portfolio manager has a stock in his portfolio that's underperforming the market, that's going to hurt his compensation at the end of the year. Or he's going to lose client assets, and that's the worst thing that can happen if you're a money manager. So it's very important that the relative strength be positive and agree with the model. Then finally, Chaikin Money Flow, which is what I made my name creating, helps you, as I said, follow the smart money, track the institutions as they buy and sell stock. And Steve, as a specialist, knows what happens in a strong stock at the end of the day when all the sellers are fulfilled. Steve, do you want to weigh in on what typically happens late in the day when there's no more sellers and there's stock to buy?
Well, as a specialist, when there were no more sellers and there was tons of stock to buy, it was our job as a specialist to create a fair and orderly market. So if there was no one else out in the pit trying to sell, then we had to sell it. But naturally, we would raise the price and raise our offer where we were. And so this kind of created this effect of it even going higher because we were only willing to sell it at higher prices, which created this kind of upward snowball.
That is a brilliant explanation and exactly the rationale for creating the Chaikin money flow. Basically, Chaikin money flow looks at where a stock closes in its range for the day, compares that to the range itself, multiplies it by the volume, and then we come up with a 21-day measure of supply and demand. And you'll see many charts where the stock sells off for 5 to 10 days, but the 21-day Chaikin money flow stays green. That's a really strong indication that the institutions are in there buying that stock at the end of the day, or that the volume is light on the decline. And then finally, we'd like some sort of entry signal. It can come from Steve Primo and specialist trading. It can come from Chaikin, or as I said, it can come from another methodology. I borrowed work from Larry Williams, who does excellent work over a 40-year period. So here's another chart that I think is really important, and I'm going to spend a few seconds on this chart. 90 years ago, Richard Wyckoff was the premier analyst of his day, and he published a lot of technical research, and he also developed this idealized way that stocks move up and down, coming out of a base, breaking out, consolidating, going to new highs, and so forth, and we're going to see the downside example in a minute. I first saw this chart in a book by Stan Weinstein, who wrote a service called the Professional Tape Reader in the 60s, 70s, into the 80s, and then wrote a couple of books on the market. He borrowed it from Mansfield Charts, who borrowed it from Wyckoff, and I found it on stockcharts.com. And Wyckoff is taught today at Golden Gate University. Hank Pruden, who is a professor and believes in technical analysis. And the reason I include this slide and why it's so important to me is that unintentionally, the Chaikin power gauge rating and the technical indicators and signals very closely mirror the idealized Wyckoff pattern. And what that does for me is it gives me the conviction to be on a webinar like this and speak strongly about how I feel the Chaikin methodology can help you make more money in the stock market. Because it's not a fly-by-night approach. It's an approach that's worked for 100 years, and the reason is all of this is based on human nature, and human nature hasn't changed. Fear and greed affect stock prices. So as we look through slides now that are examples of how you use the Chaikin methodology to find the winners and drop the losers, keep the Wyckoff pattern in mind. So first out of the box is Trinity Industries. It's classified in the transportation group, but it's a stock that's gone up for over a year for a lot of reasons, one of them being that they have mobile pipelines. They can move pipelines to where the gas and the oil is coming out of the ground and transport it to the refineries. And this stock has had a bullish Chaikin power gauge rating since July of 2013. And at that point here at the bottom left of the chart, the stock was in the low 20s and in a basing phase, and it was underperforming the market. On the left, you see the power gauge rating blown up on the Chaikin chart, and this comes from our iPad app. The stock breaks out in September, and it starts outperforming the market, and we call that a personality change. It's gone from underperforming to outperforming, and the Chaikin money flow shows that the institutions were buying the stock. And the power gauge rating actually turned neutral for a bit, so let's fast forward to early October of 2013. And we see that everything is now lined up. The power gauge rating is bullish, and the stock is outperforming the market. And on the screen, you see one of our 6 pairs of buy and sell signals. It's called our relative strength buy. And all of these signals are spelled out on our website. They're not black box signals. The relative strength buy happens when a stock is outperforming the market, comes down and gets oversold, moves under its 21-day exponential average, and then crosses back above it. And when the market and the model agree, when the power gauge rating is bullish and the stock is outperforming the market and you get some good Chaikin money flow, you get price acceleration. And in the price portion of the screen, we've got a triple smooth 200-day exponential average, which is a really good trend line that we include that helps define the uptrend and also acts as a support and resistance level. So look at all the times that stock price pulled back to that Chaikin trend line, and again and again and again, and then you get these oversold relative strength buy signals when you reverse back to the upside.
If Mark,
now,
if I could,
I'm
sorry, Mark, if I could just chime in for just a second. And for all of you Specialist Trading Strategy number 4 members, there were just a number of buy signals given in that same period to go long, and they worked out extremely well. And I just can't emphasize enough how much these two techniques complement each other.
And I found the same thing when I looked at Steve's webinars. Now, I spoke earlier about conviction enabling you to stay with a position even when the going gets rough. And we have an example of that in Trinity here in late May. Trinity had made a new high. Everything looked like smooth sailing. They had had a number of positive earnings surprises back here in February. It gapped up back here in November. And a research firm in Boston called Off Wall Street has had a fabulous track record of finding short sales. 75% accuracy, institutional following. They put out a short sale rating on Trinity when the stock was 43, and it caused the stock to drop over 10%. That's pretty scary when you're long. It was down about 12% from high to low. But it never broke the trend line. Money flow stayed positive. It's still outperforming the market with a bullish power gauge rating. And then ultimately it got oversold and went back up through its 21-day exponential and triggered this relative strength buy signal. So that's why I focused on conviction in the beginning of the webinar. That if you believe in a methodology, whether it's Chaikin, whether it's Primo, whether it's Investors Business Daily, it'll give you the conviction to weather the storm when it's appropriate or to know when to cut and run when it's not. So Trinity is a perfect example of a classic bull. Rider Systems is a second example, and remember that Wyckoff idealized pattern. It was in a base all through the summer and fall of 13, underperforming the market, a lot of money coming out of this stock. Truck leasing, but managing fleets, now called logistics. Truck leasing is no longer the phrase they use. But look what happens in early October when the power gauge rating on Rider turns bullish. Stock is still in the basing phase and underperforming the market. And then you get heavy institutional buying, and you know that because the Chaikin money flow spiked up to a big peak. And the stock broke out. It actually broke out of its volatility bands at a price of about 64, and we had a change of personality, a change of character. The stock went from underperforming the market to outperforming the market, and at that point in late October, everything was in gear. Bullish power gauge rating, strong relative to the market, strong Chaikin money flow, breaking out of a base. Remember that Wyckoff, you come back and test that breakout, and then it's off and running with this one major drop in here when some analysts turned bearish after an earnings report. And again, relative strength buy signals. So Rider has gone from 65 to 89 just the other day. And this is a classic example of the type of stocks that you'll find if you follow the Chaikin methodology. Now, the flip side of all this are what we call classic bears. And we use LinkedIn as an example, and we've actually got a blow-up of the LinkedIn chart because there's, again, a lot of compatibility between what Steve Primo's signals are saying and what Chaikin is saying. So it's the mirror image. Power gauge rating bearish, trend down, weak relative to the market. I feel religiously that if a power gauge rating turns bearish on a stock that you own in your 401k plan or that you've been trading from the long side, just get rid of it. It doesn't mean the stock can't go up. It means it's a trouble stock, potentially troublesome stock. And if you can eliminate that from your radar screen, if you're just trading from the long side, it enables you to focus on a better performing stock or a stock that has a probability of performing better. So again, weak Chaikin money flow, and you'd like some sort of sell signals, and boy, are you going to see sell signals in a minute on bearish power gauge stocks. So again, Wyckoff, the mirror image of the accumulation and markup phase is the downside. The distribution phase And we're going to see some examples of that right now. So here's Whole Foods. And Whole Foods is basically a supermarket chain, but they captured the fascination, the imagination of Wall Street with this whole healthy eating and their beautiful displays in their stores. And Whole Foods is one of those stocks that got overvalued and had a high price to sales ratio, because a supermarket company typically sells for less than their revenue. If you look at Kroger, it sells at about a quarter of their revenue, and Kroger's gone from the left side of the page to the right side of the page in the last year. Even after this big drop, Whole Foods market cap is greater than its revenue. And this stock has dropped recently from 65 all the way to 38. And at the bottom, you'll see the power gauge rating turning bearish in August, and the stock then rallying with a relative strength buy signal to a peak of 65. So we're not saying that when the rating is bearish, it means that the stock has to go down. We're saying this stock could be trouble, so avoid it. And sure enough, it turned into trouble. And look what happens in mid-October when the power gauge rating turns bearish, and then the stock starts to underperform the market in November. I've circled these three gaps on the chart. Each of these gaps represent the price action after Whole Foods reported quarterly earnings that disappointed Wall Street. And the last one came right after we triggered a relative strength sell signal. Now on this, and then the stock dropped 20% overnight. And for me, my biggest nightmare as a trader before I created Chaikin was owning a stock and waking up the next morning to find out that the company had disappointed Wall Street and was due to gap down 15 to 20%. Now, I've also put these red stars in blue on the chart because I believe that one of Steve's signals triggered at those points in time. And Steve, you might speak to that.
Yeah, those, Mark, those were actual sell signals generated once again by strategy number 4. And I think the beauty of this is that our strategies complement each other because you're always trying to go in sync with either the trend or the flow or just basically where the strength is, either to the upside or to the downside. And so once you know which direction to be trading in, which is the concrete direction, it makes things so much more simpler to be able to be in sync with the market as opposed to trying to fight it. And so as you can see, those were really nice signals that were generated, strategy number 4, and as well as some other strategy number 8 signals generated by another stock strategy we have.
And what Steve is talking about can be summed up in one word. The Chaikin power gauge rating, again, which is at the bottom of the chart and also shows up as an arc, is like a GPS. It points you towards stocks that are likely to go up, and it points you away from the traffic, away from the congestion, away from the stocks that are going to go down. And again, look what happens when Whole Foods breaks down. It consolidates, comes back up, can't penetrate that trend line, and then continues to make new lows. And this is Wyckoff 100 years ago, found this pattern, and it exists today. Now, in this box on the right, we didn't get a relative strength sell signal, but the stock had bearish power gauge rating, underperformed the market. It got overbought. This is a proprietary overbought, oversold. It combines stochastic and MACD into one indicator that fluctuates from 0 to 100, so it's bounded, and I like that. But Steve's number 4 signal did trigger right in the middle of that overbought, right near the top. And that's the power of knowing what direction the stock is likely to take. We actually put out a weekly market letter called Market Insights, which comes bundled with Chaikin Analytics. And in that letter, I give some market commentary, highlight strong and weak industry groups, but I also recommend at least 1 and sometimes 2 stocks of the week. And in April, I was a little cautious on the market, not outright bearish. And so I was focusing on some put trades, and Whole Foods was one of my 2 put trades. And one of our subscribers put that trade on and made 190% in 2 days and gave us this nice little testimonial. So people are using this, they're making money, and in the options market, if your timing is good, I think you know that the profits can really be dramatic. So here's another example of a stock in the same industry group as Whole Foods, food, drug, retail, wholesale, GNC Holdings. This is the nutrition supplement company with all those retail stores. And the Chaikin power gauge rating turned bearish in late November. And we know that because at the bottom of the screen it went from yellow to red, at a point when the stock was still outperforming the market and the institutions were still buying it. So you got an advance warning that something was wrong with the underlying factors relative to GNC. It broke down and it never looked back. And then the institutions started barreling out of it. And here we got our overbought sell signal. Overbought sell signal I borrowed from Larry Williams with one Chaikin twist. It only comes in stocks with a bearish Chaikin power gauge rating. And what it does is it looks for the stock to get oversold and make a new 8-day high. I know that Steve's work looks for a little bit of a reversal, and that's why I like it so much, because our overbought sell signals can sometimes be right on the money and sometimes they can be early. But on this chart, we've also, in this blue-red star, shown points in time when Steve's signals kicked in. And do you remember what you were thinking about GNC when those trades were put on, Steve?
Well, actually, what we were just looking was for to be entirely in sync, and it was obvious at that point. You had an early warning through your software where we were going, but at that point it was pretty obvious that the stock was tremendously underperforming, and so we're only looking to go short. So what we're basically looking for, just two of the rules which I've revealed to in my webinars before. We're looking for a bar that closes in the bottom 25% of its range that is in sync with the trend. So in this case, since we're going lower, we want it to close in the bottom 25%. And then we want to enter once and only when it trades below that. And so all of these requirements were met with these, I believe, the red stars there. I think some people were asking what those red stars were. And so you could see how powerful these tools are once you know that you're going in the right direction.
And what you can do with Chaikin is three things. You can use it as your primary source of stock ideas. In other words, what stocks am I going to look to trade on the long side and what stocks am I going to look to trade on the short side. You can use it as a confirming tool to signals from Steve or any other guru. Guru is a bad phrase these days, so I don't want to label Steve as a guru, but he's clearly a very good market technician and pattern recognition guy. And you can also use it when you're looking at CNBC or reading Barron's on the weekend. If Barron's writes up a stock and it has a bearish power gauge rating, probably no reason to waste your time reading that article, because the power gauge rating is telling you that that stock's likely to go lower. So what the power gauge rating helps you do is know what stocks to be buying and focusing on the long side and which stocks to be putting on put trades or short sale trades. So what we've been talking about can be summed up in two sort of points, and we have a five-step methodology. And step 3 is playing offense well, and to us that means knowing what to buy. So the Chaikin power gauge rating is an eclectic model. It's not just a value model or a growth model like O'Neill. It finds a lot of different ways to like a stock, and it finds a lot of different types of stock. So here's an example of playing offense with Caterpillar. Caterpillar had a bearish power gauge rating in the summer and fall of 13, and we got a series of relative strength sell signals, but it was basing. And in mid-January, the power gauge rating turned bullish with the stock at 90. And this was a stock that had about a 2.5% yield at the time. And it then started to outperform the market, and you can see the institutions were barreling into the stock. When everybody was worried about China, there were some analysts who knew that Caterpillar had a business that wasn't just dependent on China or coal mining. And when analysts raise their estimates, that has a positive impact on the stock price in the short term, and it has a positive impact on the Chaikin power gauge rating. So here's a relatively conservative stock, international exposure. These are relative strength buy signals, and the stock has traded to new highs in the 110 area. I know on Fast Money, one of the stocks that they did their little debate on was Caterpillar, and someone was bullish on it, and John Najarian, who I have a lot of respect for and work with closely, said, well, I'm bearish on Caterpillar, and he was right from a trading point of view. It sold down from about 108 to 106. But then it went on to make a new high, and again, let me reemphasize focus and conviction. The Chaikin power gauge rating, combined with the market outperformance and bullish Chaikin money flow, could have and would have told you, okay, even though John Najarian is bearish here, he's a trader, and I'm not going to get shaken out of my position if I'm a swing trader or if it's in my 401k plan. I'm going to stay with it because I've got all the evidence I need to know that he may be right, but I've got independent confirmation that says not this time. Now let's look at Apple, which is a very different animal, as you know. And the power gauge rating turned bullish initially in early October. As the stock had about a 15% move on the pre-split stock, it got up to about 560, split 7 for 1, as you know. And then in January, they reported a very disappointing quarter. Now, Apple's going to report in about a week. I think it's next week sometime. And that's going to be a key driver for the stock and the market. But they clearly disappointed Wall Street in January, and the power gauge rating didn't anticipate that. It turned neutral, not bearish, and stayed neutral until the next earnings report came out in mid-April, when Apple surprised to the upside. And on that gap up to 560, the power gauge rating turned bullish. The money was coming into it, and then we got a little momentum breakout buy here where this yellow line indicates that everything is lining up. It's like a perfect storm on the upside. Bullish power gauge rating, outperforming the market. Strong money flow tells you that the institutions are buying these pullbacks. And then I know that Steve got a couple of buy signals. I only put one of them up here because they came fast and furious in the last 3 weeks on Apple. And the stock moved up to a new high. And Steve, you may just want to share with the folks what your Apple thinking it was.
Sure. Well, Mark, when the power rating, when the power gauge turned positive and the market was acting better than normal, I believe, in early May, that is a perfect tool to say, well, now we start looking for some strong buy signals, whatever methodology you want to use. But since that time, we had a total of three all profitable signals in strategy number 4 to trade Apple on, looking at daily bars. We also had about 4 strategy number 8 buy signals, which is also another one of our stock strategies that were all profitable. So it just, as we said, it makes things so much easier when you're in sync with what the stock wants to do.
Yeah, and this earnings report that's coming out is going to be highly controversial. Morgan Stanley had some channel checks about 3 weeks ago that said Apple's going to sell more iPhones than people are expecting, and if that happens, the stock will spike up, probably get up to the 100 level. On the other hand, the other day there was stories about how China was going to be weak in the smartphone business right now. There's so much noise out there. That's what I'm talking about information overload. The power gauge rating and the relative strength and the money flow combined with the signals helps focus and create clarity out of noise. And if you can get the clutter out and separate the news from the noise, you're going to trade better and you'll be more profitable. So I thought I'd go back a year to show you what Apple looked like as it was going from 700 down to 380. Now, the power gauge rating didn't turn bearish. I wish that it had, because I could have been out there on CNBC and made a big splash with a bearish call. But the stock started underperforming the market in November of 2013. I'm sorry, November of 2012. And this chart goes from October 12 to September 13. And once it started underperforming the market, and you can see the institutions just getting out of the stock like it was plague, you got periodic rallies, whether that was short covering, wishful thinking ahead of earnings, or some analyst who changed his opinion. You got a series of 10% plus bounces. And on each of those bounces, remember this chart's a year old, but it comes from a previous webinar that I did, we got relative strength sell signals, and Steve got sell signals as well. Again, pointing out the compatibility of the specialist trading signals along with the Chaikin methodology. In this case, the power gauge rating was neutral, but the relative strength signals don't care about the power gauge rating. They just look to see if the stock is underperforming the market over a 6-month period and gets overbought and then reverses back down. And Steve had a series of signals that were almost to the day or the day after our signals. And so, again, that's why I was so excited to do this webinar, because there's such compatibility between what we're doing and what Steve is doing.
Yeah, Mark, I can't stress enough that during that time period, I talked with so many traders and investors alike who were saying, what do you think of Apple? Is it going to bottom out here? This is getting to a point, it's ridiculous. We have to purchase this at some level. And I was saying, well, you know, I don't think so at this point. We're in a strong downtrend until we you know, see any type of change. We can continue to get sell signals, but they wanted something more concrete. And so this is why something such as the power gauge can really help you see something concrete right in front of you, so that you really have the confidence to know that you shouldn't be in anywhere, shape, or form looking to buy, but continue to sell or just stay on the sidelines until this bottoms out.
Sidelines is a great place to be in a stock that's making new lows in my book. But it did turn around here in July, August of 2013, and the stock went above that long-term trend line and stayed above it and came down from a high of about 512 and all the way down to 450. It didn't break the line. And that was the start of a progression. Remember, we saw on the previous chart that in October, the Chaikin power gauge turned bullish. So it was after that pullback to 450, which is represented on this chart by 65 because it split 7 for 1, that the power gauge then turned bullish. So stocks change character, and the power gauge can reflect that because it's picking up on what the analysts are doing and valuation metrics and so forth, and the technicals. Now, the second thing that Chaikin power gauge helps you do well is to play good defense. And most people don't talk about defense on webinars. In fact, my wife, who now uses the Chaikin methodology, once said recently on a webinar, have you ever been to a cocktail party where people said, you know, I found a great stock to go short? Nobody does that. People at cocktail parties are saying, I think I found the next Facebook, or you know, I've got this social media stock that's ready to explode. But the fact is that professionals, the Peter Lynch's of the world, the Bill Millers, the new breed of hedge fund managers, know how to play good defense. And good defense, to me, means 3 things. Number one, having good risk management and money management, because if you let one position become an outlier and it represents a big loss, you can destroy a year's worth of profitable trading. So you must have the discipline to cut your losses. Good defense means getting stocks with bearish power gauge ratings out of your portfolio, and then finally it means turning landmines into gold mines, and by that we mean taking a stock like Lululemon, which fits that classic bear pattern, and profiting from the downward moves. And that means buying put options ahead of earnings, and a lot of people are nervous trading stocks ahead of earnings, but the fact is that a stock with a bearish power gauge rating, as we saw with Whole Foods, will very often disappoint and gap down. And it also means looking for opportunities to buy puts or go short that stock. So point number one, play good defense. If you're long Lululemon and the power gauge turns bearish, get it out of your portfolio, find another stock in the same industry group if you would like, or find a stock in a stronger industry group if the industry group is weak. And I've circled 2 examples of where Lululemon disappointed Wall Street and gapped down 10 to 20%. Now, I started out by saying that if you have a high price to sales ratio, you're on a high wire without a safety net. And Lululemon still has a high price to sales ratio of about 4 times revenue, even though the stock has dropped from over 80 to 38. At its peak, it was selling at 10 times revenue. And when things started to go wrong with Lululemon, they really went bad. The founder resigned. The founder and CEO resigned. The chairman of the board started selling stock, and the company had a recall of their biggest selling yoga pants. And for those of you who don't know Lululemon, they sell overpriced exercise gear to primarily women who do Pilates and yoga, and it's became very fashionable. The fact is you can buy the same clothing at a third the price at Gap's Athleta chain, at other discount stores, and Lululemon had a mystique, and it was on a high wire without a safety net. And once it broke and the power gauge turned bearish and it was underperforming the market, look what happened. The institution started selling the stock in droves. This gap came right after a relative strength sell signal. So did this one. And on this chart, we see two of Steve's System 4 signals that kicked in on Lululemon. Now, there have been leverage buyout rumors. The founder has come back into the picture. The board is sort of in disarray as to what to do next. And this is a classic example of a stock that was on a high wire without a safety net, and everything went wrong. Doesn't always happen that way, but the money flow is saying that this stock is still under distribution. And I think it's pretty clear, Steve, that the technicals have not yet turned around. Another example of bearish power gauge rating enabling you to turn a landmine into a gold mine, Splunk. There were a whole series of stocks in the summer, fall, and winter of 2014 which skyrocketed just like they did in 1998 to 2000. These were stocks in the cloud computing, big data area, stocks like Splunk, stocks like Athena Health, stocks like Workday and Tableau, symbol DATA. And these were companies that fascinated Wall Street. In the case of Splunk, at its peak at 105, the stock was selling at 40 times revenue. It's now down in the 40s after dropping below 40. It's around the 47 area. And it's still selling today at almost 20 times revenue. Now, to put that into real-world terms, let's say you're in a small town and you think the dry cleaner has a good business and you want to invest in a small business for yourself. And you say, okay, I'm interested in you buying your business. And the dry cleaner says, terrific, I think I'd like to retire. What's the first question you're going to ask him? How much revenue you generate? And let's say he tells you he generates $100,000 a year in revenue. And you say, well, that sounds interesting. What do you want for the business? And he says $4 million. Well, how many of you would pay $4 million for a business that did $100,000 in revenue? We haven't even asked him what he takes home at the end of the year. So if you would do that, type Y into the question box. And because I can't see the question box, I'm going to guess that nobody has typed in a Y, because you'd be crazy to buy a dry cleaner for $4 million that did $100,000 in revenue. Well, that's what people were doing with Splunk and with Athena Health, which makes medical record-keeping software for doctors. So the reason I've used this as an example is that this was a bearish stock of the week in my weekly market insights back in April when the stock was 65. And that's that big red arrow. And it just triggered an overbought sell signal. And it's triggered two more of those. And I mentioned that sometimes our signals are spot on and sometimes they're early. If you follow Steve's methodology, you're going to wait until it rolls over and meets his criteria. So that's why I love what he's doing. But the fact is that Splunk went from 65 all the way to 40 in the space of about 4 weeks. And we put this out as a bearish rating. And you can do the same thing. This is not Mark Chaikin Guru. I'm just combing the names, using the Chaikin methodology. I'll typically spend a half hour trying to find 1 or 2 stocks to recommend each week. And you can do that too. You can do it in 10 to 15 minutes a day, and we're going to show you a couple of techniques to do that. So Splunk went Kerplunk. And then finally LinkedIn. The social internet stocks have been a disaster. The power gauge rating turned bearish on LinkedIn in early December when the stock was around 210. It has never penetrated this long-term trend line. We've got overbought sell signals here, here, and here. This one didn't work. This one did. And Steve got signals on LinkedIn. I know this was one of his favorite short ideas. And we had a bearish power gauge rating, negative relative strength to the market, and negative money flow when his 3 signals triggered. And Steve, why don't you talk about LinkedIn for a second, because I know it's been a favorite short of yours.
Yeah, once again, for those people, I see some questions there wondering what those stars are. The red stars are actually strategy number 4 signals. They're working in conjunction with the power gauge. And the beauty of it is we were totally in sync. We had the confirmation of knowing that we're in sync with the market. But as Mark said, we oftentimes wait with strategy number 4, a number of our strategies, to either close in the top 25 or bottom 25%. And when you looked at a chart in LinkedIn and when you see all these multitude of bars closing in the bottom 25%, you know the market basically is telling you at that time which direction it wants to go. And so combined with the power gauge as well as our rules for these strategies, it's just we had some really nice signals and on the short side, and we continue to get some really nice signals as well.
As I'm sure Steve emphasizes, it's all about having an edge, and his signals give you an entry edge. Our signals help, but the power gauge rating basically points you in the right direction vis-a-vis a stock. In the case of LinkedIn, it was to the downside. Now, 6 pairs of buy and sell signals, I won't go into them in depth. They're on our website. They tend to mirror the Wyckoff turning points, and they do a good job. And 2 examples of those sell signals and buy signals. Here's SanDisk, which is in the very strong semiconductor group, and we're going to look at that in terms of an ETF shortly, because as we mentioned, group strength is important. And here are a series of signals, relative strength, buy signals, each of which was very profitable, followed by price acceleration. Why? Because the model and the market agreed and the money flow was strong. And when you get that reversal back to the upside, this is powerful. Whether you're looking to trade an ETF or a stock, this is what a classic bull looks like. Now on the downside, 2 examples. Amazon, power gauge rating turned bearish in mid-January. This is clearly a stock that a lot of people like. They're taking over the retail industry, but they're not making any money doing it. So periodically it fascinates the analysts and it outperforms and it spikes up. And this chart goes back to early July. I think it's had a big upward spike since then. But when it starts underperforming the market and we get a sell signal as we did in mid-April, I made that bearish stock of the week, and we'll come back to that with one of the endorsements of a subscriber who did very well following that Amazon trade. But the key takeaway here is the power gauge in mid-January gave you some advance warning that Amazon, under the surface, under the hood, had the potential to drop, and sure enough, it has. And it's been a big underperformer. The retail sector hasn't been good in general, and Amazon is just not making new highs, and the market is. So that tells me everything I need to know. If I'm on the long side, I don't want to be in a stock that's not making new highs with the market. And then finally, Pandora, which 2 weeks ago I made my bearish stock of the week, and the reason is very clear. The stock had rallied up 50% from its low of 20 to about 30, and it had retraced 50% of its 20-point down move and stopped right at on long-term resistance line, and then triggered a relative strength breakdown signal. So I made that my bearish stock of the week. It had closed at 29.5, and 2 days later it was selling at 24.5. And if every trade worked out that well, I would be on an island somewhere, but they don't. But sometimes with a combination of skill and luck, you pinpoint a stock like Pandora. Now, in a minute, we're going to see Alcoa. That was my bullish stock that week because they were due to report earnings, right? The first company to report in earnings season. And so we had a bullish and a bearish recommendation on the same market insights. They both worked out. And Pandora is a classic example of a stock that rallies up to resistance, retraces the move, and then moves back to the downside. So we got a lot of feedback early on when we released this product a year and a half ago that these signals are great, but how do I find them? I don't want to be digging around 5,000 stocks because we have a power gauge rating on 5,000 stocks. It's updated nightly. Well, we created a dashboard that shows you the signals in any list in the system. So we give you the ability to create a list of stocks. We call it My Stocks. That's your core list. You could create a list called Primo, which has all of Steve's recommendations in it. And if he's giving longs and shorts, you could have 2 Primos. You could have a Primo long and a Primo short. And it gives you the ability to very quickly monitor those price charts and the performance of those stocks going forward. And so here I've included a screenshot of the dashboard from an April 22nd webinar I gave. And the reason I did that is, as I mentioned earlier, I was cautious on the market in April. Still relatively cautious up at the 2,000 level, but we're 100 points higher, so the caution may have been premature. but I was looking for sell ideas. So in the 90 stocks that I follow, 6 of them triggered sell ideas on April 22nd or 21st. One of them was LinkedIn, which gave an overbought sell at 176.90. It dropped 40 points over the next month to 137. Lululemon was 49. We know that dropped under 40. Coach, we're going to see in a minute, was 49. That also dropped under 40. So it's a powerful way to zero in on signals in the stocks you're following, or to take a list like the S&P 500 or an ETF where you think that you have a bias in favor of semiconductors against retailers, and find the signals, as we're going to see, on the stocks where you can leverage through options and outperform the ETF. So that brings us to the ETF section. ETFs have obviously become a big deal. How many of you out there trade ETFs? And Steve, I'm going to ask you to tell me what the response was, because I can't see the question box yet. Type Y in the question box, the chat box, if you trade ETFs.
Well, we're getting about 5 or 6 people right now, right off the bat, saying yes, they do trade ETFs.
All right. Well, one thing Chaikin does is to give you a look under the hood of the ETF and show you what stocks are in there and whether they have bullish or bearish power gauge ratings. So
closer to 15 now, Mark, just to let you know.
Yeah, they're obviously a growing band of traders. So there are so many ETFs. There are 400 equity-oriented long ETFs alone, forgetting the leveraged and the short ETFs. And we group them into categories: financial, energy, consumer, defensive and cyclical, health. But I like to look at the SPDR ETFs. There are 9 sectors in the Standard & Poor's 500. Each of them has a select SPDR, and then there are 20 subgroups. And if you tap on the SPDR subsectors, you'll see the 20 subsectors ranked by the number of stocks which have bullish or bearish power gauge ratings. So it's a unique way of looking under the hood. Most people who monitor ETFs are looking at price momentum and relative performance. We actually look at the stocks in the ETF and tell you whether they have bullish or bearish potential. So in the top 5, REITs were at the top. You had semiconductors. The XSD is the SPDR semiconductor ETF. And in that display, they come up ranked by power gauge rating. And look here over on the right, you see Skyworks, which had given a buy signal when I created this chart about a week ago at 46.98. Now, we're going to come back to Skyworks. But if you tap on that ETF, you get a chart, and that shows you that the semiconductors have been outperforming the market. They made new highs, double top maybe. So how do you take advantage of that? Well, look for a buy signal in a stock in that XSD ETF, and there's Skyworks. This time with a money flow buy. You also had buy signals in Intel and MSCC at that point. But I like Skyworks because it's been in an uptrend for a year. And even when it was in this basing period, it had strong relative strength to the market, and then a series of relative strength buy signals, and then this money flow buy. And so here's a stock that was actually outperforming the semiconductor ETFs. And they're going to report earnings on Thursday this week after the close. And Skyworks has a pattern of outperforming Wall Street estimates. They've beaten Wall Street estimates 9 quarters in a row. And the day after, they averaged a 6% gain. So Skyworks caught my attention because they're due to report, and I made that my bullish stock of the week this week, based on the fact that they were due to report and that this is a stock I'd like to be long ahead of that earnings report. Additionally, Skyworks has already guided Wall Street analysts higher. On June 3rd, 2/3 of the way through their quarter, they said, we're doing better than even we expected, so raise your estimates, guys, because we're having a bang-up quarter. One of the reasons is they make chips for mobile devices, and they're in the iPhone 5 and expected to be a big player in iPhone 6. And they've scored contracts with set-top box manufacturers, with automobile manufacturers, because they're involved in something called the Internet of Things, everything connecting to everything. And Skyworks is just a growing company. It's got a pretty steep valuation, but the PE ratio is still fairly modest, 20 to 22 for a stock that's had a great growth record. And I think this was a good stock to consider buying ahead of Thursday's earnings. So you'll get a test of Chaikin Thursday night and Friday morning when Skyworks reports, and you'll see whether they beat again. The last time they beat estimates in April, the stock spiked up over 10%. That's this gap here on the chart. They did it in January. So there's a pattern of Skyworks spiking up after beating Wall Street estimates, and we'll see if they do it again on Thursday night. Now, let's look at the bearish ETF very quickly. If you swipe down on that listing I just showed you, you'd see that the three most bearish ETFs in terms of power gauge ratings are aerospace, biotech, and home builders. So I tapped on home builders, and I got this panel display which ranked all the home building stocks in that particular XHB ETF by power gauge rating. And look here at the bottom left. Lumber Liquidators, which was a bearish stock, had triggered a sell signal at 76. And this was just last Wednesday. And first we'll look at the XHB. So compare that to the XSD, the semiconductor ETF. Notice semiconductor was going from bottom left to upper right on the chart. And this is a stock, an ETF rather, the home builders that can't get out of its own way, didn't make a new high with the market, double top here, selling back down after getting overbought. And if you went to the dashboard looking for a sell signal, you would have seen Lumber Liquidators last Wednesday, July 9th, overbought sell 76.59. Now, do any of you know what happened to Lumber Liquidators on Thursday last week? The stock dropped 20 points. Because the company guided lower. They said not only was it a bad winter weather-wise, but people aren't buying lumber, flooring, hardwood. Our business is really going to hell in a handbasket. And that 20-point drop was preceded by that sell signal. So this is an example of how you can go from a weak, just a ranking of the 20 group ETFs, the SPDR 20 subsectors. Look for the strongest ones to find a stock like Skyworks. Look for the weakest ones to find a group, an ETF like the home builders, and then zero in with a signal and maybe get lucky and buy a put on Lumber Liquidators with the stock at 77 and watch it down 20 points the next day. And I'm sure all of you know what that means in terms of the options price. So I'm going to end the webinar by showing you how you can use Chaikin during earnings season. We already saw that with Skyworks, but I like to call this section winning plays during earnings season, both long and short. And obviously, if you can throw the long bomb, as we're seeing in this photo, you can make a lot of money on both the short side and in the options market. So a couple of examples. Alcoa. Power gauge turned bullish in late March. Alcoa is transforming itself in front of our eyes. It's no longer an aluminum smelter that sells Reynolds wrap. It's making end products made out of aluminum. So Ford's going to introduce an all-aluminum truck for the first time. The F-150 is going to be all aluminum, and Alcoa is making parts for that truck. They're also making wheels for cars made out of aluminum. And they're making aircraft parts. They just bought a big aircraft parts manufacturer in England for jet engines. So Alcoa is transforming itself from a commodities company to a company that provides downstream parts, and that's made a big difference, and Wall Street analysts are starting to see that. So it had been outperforming the market here starting in October. Power gauge turned bullish with the stock at about 12 3/4. I featured this a couple of times, and this was my bullish stock of the week 2 weeks ago with the stock at 14.90. Why? Because they were due to report earnings. And stocks with a bullish power gauge rating very often surprise to the upside. And sure enough, Alcoa did, and the stock spiked up and hit a high of about 15.98 before pulling back on profit taking with the market. So it's an example of how to use the power gauge rating during earnings season to find stocks where you can get long, as I'm suggesting Skyworks, or get short, as we suggested with Coach and Whole Foods. And speaking of Coach, here we are. This is the gift that keeps on giving. Coach is another brand that got overblown like Whole Foods. They basically make the same thing that Kate Spade and Michael Kors and a lot of other apparel manufacturers make: handbags, belts, leather goods. There's nothing special about Coach, and but they did fascinate Wall Street. But they've disappointed 4 times in a row. Negative earnings surprises are like cockroaches. There's never just one of them. It's hard to turn the ship around when the ship's going in the wrong direction. And each time Coach reported a negative earnings surprise, the stock gapped down. So the last gap down came after both Steve and Chaikin got sell signals. And you see them on the chart here, and then you got big acceleration to the downside. Steve got another sell signal here, and this stock just keeps making new lows. And the power gauge has turned neutral because the value metrics have actually turned fairly attractive. We are having big thunderstorms here, so hopefully the internet connection stays up. But imagine what this is doing for you when it points you in the direction of a bearish stock, and then you get a signal with the stock underperforming the market and negative money flow. And I think your signals speak for themselves here, Steve. Anything you want to add to that?
Yeah, no, just that we had some great signals because you know, we had the power of the market behind us, and it was just once again easy. Once you know that you're basically swimming downstream, it makes the signal so much better.
Boy, that's the way I like to say it. You know, try rowing a canoe against the tide, and you're not going to do very well. And then finally, my favorite pick, because I was on Fast Money Halftime Report, and this chart is Priceline in August of 2012. And they asked what I thought about Priceline, and I said, well, the power gauge rating is bearish, and they're due to report earnings tomorrow, and I think that Europe is weak, and most people don't know Priceline gets 90% of their profits from Europe. And so I think this is a stock you should sell ahead of tomorrow's earnings report. And John Najarian was on the panel, and he said, well, I'm more bullish on Priceline, but if Mark Chaikin is bearish, I'm going to take a closer look. And sure enough, Priceline disappointed, and the stock gapped down and opened 100 points lower. And it turns out that John Najarian had been long calls on Priceline, switched around, and they did a reprise on CNBC. And he said that he had bought put options at $1.80 that were out of the money, that he sold at 18, and they went to 42 that day. And so here's an example of getting a little bit lucky, but having the wind at your back and being on the right side of a stock and making 23 times in one day on your put option. Now, for those of you who think that's a once-in-a-lifetime occurrence, here's a chart from 2013 on Intuitive Surgical. We had a series of relative strength sell signals in June and July of 2013 on Intuitive when it was trading at about 500. And then they guided lower even before their earnings. They warned that their earnings were going to be very disappointing, and the stock dropped 100 points. And we've seen this in Chipotle on the downside before it got stronger. But the bottom line is, with so many high-priced stocks, because stocks aren't splitting the way they used to, there's the chance to see 100-point declines. And if the power gauge rating is bearish and the signal crops up, you've got a wonderful combination and a way to make landmines into gold mines. So I started the presentation by saying that I was going to show you how you could become the smart money. And I hope I fulfilled that promise, but here's an example that I think illustrates what I was talking about. There's a new service called TipRanks. It's free, and they actually have a browser plug-in, but they rank Wall Street analysts. And they rank Jessica Cohen at Merrill Lynch as a 5-star analyst on media stocks. And she put out a sell recommendation on DreamWorks, DWA, on April 28th, when the stock was trading at 26 and change. The power gauge rating turned bearish on DreamWorks in early January. That's why I say that the Chaikin power gauge and our technical approach in combination can make you the smart money. You don't have to wait for Wall Street. You don't have to read about it in Barron's or hear about it from Kramer on TV. You're going to know more than the analysts do at times. And sure enough, the Merrill Lynch selling on her sell recommendation pushed the stock all the way down to 22.5. It then rebounded to 28, all within the space of 3 weeks, didn't violate our downtrend line, and then came down and made new lows. So this is an example of how you can become the smart money by using the Chaikin tools. So I believe so strongly in this. I have that conviction based on the Wyckoff charts and the 100 years of work and the fact that I've used these techniques in various Wall Street roles for over 40 years. I'd like to encourage as many of you as possible to use and benefit from the Chaikin Power Gauge and the Chaikin Analytics tool. So we have a webinar special. The list price, the real world price for Chaikin Analytics for iPad and desktop is $1,950 a year. And as a webinar special, we're taking $200 off that, and that brings the price down to only $1,750 a year. That's less than $150 a month. Imagine going into any of those options trades, and you could have made the price of that 10 times over in your first trade or more. So to take advantage of that offer, you can go to chaikinanalytics.com/signup and type in the offer code Primo, or you can call Paul Sherwood at 877-9-STOCKS or paul@chaikinanalytics.com. Now, for those of you who think that $1,750 is a lot of money, and in the real world it is, I'm going to show you a testimonial. Someone took that Amazon trade that we recommended and gave us this testimonial. Great trade. Profit covered next year's total cost of 2 months in Hawaii after taxes. My wife thanks you and I thank you. And anybody who's been to Hawaii lately knows that 2 months in Hawaii costs a heck of a lot more than $1,750. But one more inducement to try Chaikin, fast action bonus. If you subscribe by midnight Friday, July 18th, we'll take an additional $200 off, bringing the cost of Chaikin Analytics down to $1,550. Now, what do you get with Chaikin Analytics? You get a one-on-one tutorial to get you started because it's a powerful set of tools, but it helps to know how to use it and know what all the features are. So we do a one-on-one tutorial. We take education very seriously, as does Steve and the whole specialist trading crew. You get the charts we've been looking at for both iPad and desktop with all the proprietary indicators, 6 pairs of buy-sell signals, and all the list manager functionality. You also get research reports on 5,000 stocks that are updated nightly that are bundled into the product. 4-page PDFs on the stocks we follow, and a portfolio health check on any list in the system, which highlights the weak stocks and the rating changes. And then finally, my weekly Market Insights newsletter, which features at least one and sometimes two stock of the week. And we've been fortunate that 69% of them have outperformed the market over the last 18 months. So the reports on the iPad happen when you flip the iPad. And you can then email them or print them. The portfolio health check, which is very important on any list or the stocks you're following, highlights rating changes, stocks that are due to report earnings, and a unique Chaikin Power Grid. And one of our subscribers gave us this testimonial. It said that my subscription paid me back 11 times in 2013, by far the best investment I've ever made. And this is someone who was struggling with the market, who was using technical analysis, but where Chaikin really helped bring things into focus and give her conviction. So I encourage you to sign up now by going to our website or calling Paul Sherwood. And at this point, I'm going to switch to our desktop version, and we'll take questions, and that can include looking at any individual stock that you're interested in. So if the technology gods are kind to me, this is going to be a very seamless segue to our Chaikin Analytics for Desktop app, and it has been. And I'm now going to open up the question box.
Yeah, excuse me, Mark, while you're doing that, I know a number of people have asked in the question box I saw earlier if this is being recorded. Yes, this is being recorded. We record all of our webinars, so you can request a link to this later on, and we'll give you the entire recording. Also, one of the questions I saw here was, does it work on other markets? I know that we have a customer from India who's very successful trading the Indian markets. Also, we have some Forex traders, so I thought maybe you could start out by simply answering that.
Yeah, the quick answer is no. We will have Canadian stocks and European stocks by the end of the year, but right now it's 5,000 U.S. equities and 1,500 U.S. ETFs. So it's U.S. equity oriented, although you could look at something like GLD and see the relative strength and the relative strength signals, but it's mainly oriented to U.S. equities, not to Forex and not yet for Indian stocks. So there's one question here. So this is not good for day trading. It could be an okay input for day trader because it'll tell you which stocks to focus on the long and short side, but it's mainly for everything from swing trading up to intermediate to long-term investing. I know that I day traded for a while when I left a big company, Reuters, and I always did better if I had an edge, and that edge for me, if I was day trading today, would be the Chaikin power gauge rating. I'd only want to day trade stocks on the long side if they had a bullish rating, and the same on the short side. I'd want to have stocks with a bearish rating. There's a question that I really want to answer. Is there a trial demo? And John, the answer is no, and the reason is we invest a lot of time and money to onboard people. And we find that either a 30-day money-back guarantee or a trial demo encourages a lot of people who very often don't put in the time to learn the system. And so we're looking for people who are serious about trading or managing their own investments, 401k plans. And for that reason, we don't have a trial. However, and we do give a lot of personalized attention, we do have a monthly subscription price, and that's $195 a month. So that's a good way to get your feet wet if you don't want to take advantage of this very interesting and discounted price. Someone's asked about Groupon. Well, there's a question, is the desktop version different? We're looking at the desktop version now, so because it's not the iPad, it's got a different form factor, but it's the exact same information. So this is my stocks list, and I'm clicking and looping from stock to stock. Here's DreamWorks, here's Darden Restaurants, Olive Garden, and a couple of others that's been making new lows, and the power gauge has been bearish. Yahoo reported earnings after the close. I was tempted to make that my bearish stock of the week because the power gauge was bearish, but Yahoo has the Alibaba IPO coming up. I think they surprised to the upside, but the reaction has been very tepid so far in the aftermarket. Let me just check. Yahoo was trading slightly higher when we started the webinar, and now it's down 62 cents. So Yahoo was up 60 cents earlier, trading at about 36.30, and it's now 34.99 in after hours. It shows you that a power gauge rating is your beacon, your GPS during earnings season. And this would have been a good, actually put by today ahead of earnings. So someone asked about Groupon, and Groupon has had a bearish rating for quite some time. Turned bearish initially in November, then rallied, made its final peak, double top, and then the rating turned bearish again in January, and it's been straight down ever since. Obviously, the institutions are selling it. Again, our overbought sell signal was a little early here, but the stock ultimately reversed to the downside and was down around 640 today. So here's another example of the power gauge keeping you out of trouble, and two earnings reports that disappointed, both yielded gap down to new low, and you would have known to be out of the stock or looking for a place to buy puts, and I'm sure that Steve had sell signals on this one. We just didn't get them on this is actually the live chart. So here's a question. There's no Android version of the app. Sadly, for Android owners, most Android people are techies more so than with the iPhone, and they're not looking at financial apps on the Android. So as a relatively small company with only about 20 people, we just don't have the resources to build for every platform, and so we don't have an Android version. We have a free iPhone version that gives you one-by-one power gauge ratings, which is a way to see how the power gauge ratings have worked. Here's Buffalo Wild Wing. Actually, the rating turned bullish in late December when the stock was at about 100. It was outperforming the market, so that's very good. You got an oversold buy signal at about 108, and it's peaked. And the power gauge rating has been bullish off and on, and you just got another buy signal on the stock over here. Now, on the desktop app, if you want to see the power gauge rating, you click. You can drill down and see what contributes to the bullish rating or bearish rating, the factors that we talked about early on. You can loop through 4 panels of fundamentals. You can see what this company does. For those of you who don't know, it's a chain of chicken wing stores. And you can also go up a notch and look at the whole industry group. So in this case, it's the food, drug, wholesale, retail industry. And you can find stronger stocks. Or if you go down to the bottom, you're going to see some of the weak names we've been looking at, like Whole Foods and Fresh Market and McDonald's and the like, and stocks like Darden Resources and Dunkin' Donuts. So industry group analysis is a big component in ETF analysis of what we do, and here's an example of that. Has your position on financials changed? Wells Fargo, all positive, Citicorp, JPM. Let's take a look at Wells Fargo. They reported earnings last Friday. I typed in Whole Foods. I'm obsessed with Whole Foods because I think it's such an overpriced stock. But here's Wells Fargo. The power gauge rating had been bullish. They actually met earnings estimates, but there's been a fairly deep profit-taking wave in a lot of the financial stocks, and Wells Fargo pulled back to support and is starting to bounce again. So the rating turned neutral, but it's still outperforming the market. It's not my favorite group these days just because the big banks like Citicorp and JP Morgan still have all those settlements ahead of them and the exposure to Europe. Wells Fargo does not. So the power gauge rating actually turned bearish on JP Morgan in here. If I were to own one big bank, if you forced me to own it, it would be Wells Fargo because they have no or very little exposure to Europe or to the mortgage settlements anymore. Citicorp beat estimates. Let's see what the stock did yesterday. It's in a downtrend. I'm not fond of being long stocks in a downtrend. It gapped up today. Well, it gapped up yesterday and continued higher today. So clearly the earnings were a big driver, but it's now gotten overbought with today's price action, and we'll see what happens. Stocks in a downtrend that rally can sometimes turn around, but usually they revert back. There's a question on there, filters to sort your list by average volume or average true range. Right now we don't. We were just speccing out a screener, but that won't be available till early in 2015, and that screener would enable you to filter out from volume. One of the ways you can find stocks for options trading that tend to have high volume is to go and look at the S&P 500. So if I'm looking at my stocks list, I can also go to the S&P 500, and this shows you the power of the Chaikin. When I click on SP 500, the whole S&P 500 is going to come up ranked by Chaikin power gauge rating. Now on the iPad, you'd see about 30 stocks per screen display, but here you have to toggle all the way down to see the weakest names, which are McDonald's and Masco in the home building area, MasterCard, and the ICE Exchange, which owns the New York Stock Exchange now, Home Depot. But we also have our signals window, which is the equivalent of the dashboard. So every day you can see which stocks in a group have triggered, and if you're looking at the S&P, typically there'll be some good options volume on those stocks. So you had a relative strength buy signal coming into today on Hewlett-Packard and Interpublic Group, and then you can see the sell signals if you're bearish. MasterCard, Target, again, in the retail sector, which has been weak, triggering a sell signal, and the power gauge has been bearish for over a year as the stock has gone from the top left to the bottom right of the page, the exact opposite of what you want to do if you're long a stock. So it triggered an overbought sell signal. It was actually up today, but this is an example of how you can drill down within Chaikin and find ideas and zero in. Facebook. Facebook is interesting because it's had a bearish rating. Recently, it actually was bullish at the early part of in the fall of 13 when the stock was 40 on the way to 70. It turned neutral and then it turned bearish again here in mid-March. It's gone sideways to slightly higher. This is a stock I wouldn't own. It's got one of those stocks with a very high price to sales ratio. So price to sales is 22x. Remember the dry cleaner analogy. Would you pay $2.2 million for a dry cleaner that did $100,000 in revenue? Well, if you thought it was going to do $1 million in revenue in 5 years, you might. And people are betting that Facebook is going to monetize. But by and large, this is not a stock I would own because the whole group, the LinkedIn's, the Pandoras, the internet social stocks have just been underperforming. Now, if you wanted to see that research report, in the power gauge, you flip it. Here you click on research report, and a 4-page report on Facebook comes up. So this is a complete research department in a box. If you want more information, the research report gives it to you. And then one final example, if I go into my stocks list, and I've got about 90 or 100 stocks in my list. Again, this is the desktop app. The iPad is mobile. Here's my stocks. Alcoa is right at the top with Apple and Archer Daniels and Cigna, ConocoPhillips, Cirrus. And if I want to see that portfolio health check that I was referring to, and this all comes bundled with Chaikin Analytics, here's an analysis of those 100 stocks. And what we've done is we immediately focus on the weakest names, because we want you to play defense. So this tells me that 31% of my stocks have bullish ratings, 25 stocks have bearish ratings, and those are the ones I want to focus on. It also tells me that this group of stocks was down 2.4% for the week versus the S&P down 0.8, and it shows me which stocks had power gauge ratings that turned bearish. So Surgical, Transocean, RIG, the 3D printing stocks all turned bearish. But more importantly, it tells me which stocks I'm following are going to report earnings this coming week and what the power gauge rating is. So here's that Skyworks with a bullish rating due out on Thursday after the close. Athena Health, which is one of those flyers that is broken, is due to report on Thursday after the close as well. And Google, and then we've got this power grid, which basically is like magic, and if you subscribe to Chaikin, you'll get the advantage of that. But let's just look at those two stocks, or a couple of them. Transocean is actually in an industry group that's a little bit stronger now, but it's had a bearish power gauge rating off and on for a year, and the stock really can't get going to the upside. Looking at Skyworks, which we looked at earlier, we see the stock that's due to report that's in a nice uptrend. And then if we look at Athena Health, which was another one of my bearish stocks of the week, about 2.5 months ago, you see a fallen angel. Again, a stock that got up to $200 from $50 a year earlier, and that sold all the way down from $200 to $95. And power gauge rating turned bearish in the middle of that decline in mid-March at about 170. And at that point, as I said earlier, you get the stock out of your portfolio and you look for opportunities to go short the stock. So they're going to report on Thursday. They have no earnings. They're selling at 11 times book value, price to sales of 8, and when I toggle to look for the earnings, they really don't have any. If you there's two ways to report earnings, GAAP and non-GAAP. Giving a generous non-GAAP earnings, they earn 23 cents and the stock is selling at 127.
Look at the expert.
And look at the expert opinions. They're bearish. And the reason is the analysts are lowering their estimates. It's in a weak industry group. There's a big short position in the stock and the insiders are selling. Now, is this a stock you want to be long? Absolutely not. So the question is this disk or web-based? This is browser-based, so you're basically accessing this through app.chaikinanalytics.com or on the iPad. And we'll take one final stock, which is Yelp. And I don't think the power gauge helped you in Yelp. It was bearish. It's been bearish, and you got this run-up in here. But now the stock has fallen back. It's not a stock I would own again because it's in that computer software and internet software and service business, and the trend is against you. So with that, I'm going to bring this presentation to a close. Thank you very much to both Steve and Brett for making this possible, and encourage you to sign up for Chaikin Analytics. At this price, if you find one good trade in the next 4 weeks, you'll make back the price of the subscription 5 to 10 times. And we've seen people do it. I'm not into overhype. We stand behind our product. We support it personally. We're going to institute a call-in where any subscriber can call in once a week at a set time and answer questions. And again, I'd like to thank Steve for giving me the opportunity to share my passion for the Chaikin Power Gauge and Chaikin Power Tools with you. And Steve, you may want to wrap this up on your end.
Mark, if there's just one thing I could add to all of our members and students out there, as you well know, I've spoken about it many times, our strategies are traded in roughly over 60 countries, and our stock members, probably the most popular question I get from time to time is, Steve, how do I know which stocks to pick? Because there's so many stocks available, so many equities and issues, and I think this is a great tool for seeing when the character of the particular stock has changed so that you can be in sync with the intermediate direction. It's a great directional tool for the intermediate term. And then you can apply any strategy, either Mark's, myself, or something you have yourself that you feel confident in using. So it's a great tool, once again, to be in sync in the intermediate, to add any type of strategy. And if you really want to take advantage of this, we say do this by Friday the 18th to take advantage of that special offer for only $15.50. Thank you once again to Mark for presenting today, being our special guest. Thank you all for taking time out of your day to join us. We look forward to seeing you next time. Bye-bye.